Welcome to this introduction to foreign exchange. The first thing to understand about the FX market is that it is what we call an over-the-counter market, or OTC. In other words, there is no central exchange that all the trades pass through. Now this means it can be very difficult to work out exactly how much volume is passing through the market. However, the Bank for International Settlements conducts a survey once every 3 years. This is called the Triennial Central Bank Survey. And the latest report, released in 2010, estimates that the daily turnover in the foreign exchange market is around $4 trillion every single day. Now this is many times larger than the volume of all of the world's equity exchanges combined. In fact, the Eurodollar alone has more money flowing through it on a daily basis than all of the world's equity exchanges. If we look at this image, it shows the market share of various different currency pairs, and you can see by looking at this that the top three currency pairs alone, so this is Eurodollar, Dollar Yen, and Sterling US, those three currency pairs alone make up more than half of all of that turnover in the FX market. Now because it is an over-the-counter market and there is no central exchange through which all the trades have to pass, the FX market trades 24 hours a day, 5.5 days a week. Trading kicks off in New Zealand on Monday morning and then continues around the clock until Friday afternoon in New York. Access for retail traders is usually via an FX provider such as IBFX. The benefits of using a company like IBFX include the fact that you've got an online trading platform which allows you to trade from just about anywhere, whenever it suits you. Another benefit that you have as a retail FX trader is access to a significant amount of leverage. This means that with only a small deposit in your account, you can actually control a fairly large amount of money. Retail traders also enjoy tight spreads, which means that costs of trading FX are very, very low. And with modern trading platforms, the speed of execution is also very fast. Server-side execution time with IBFX is about 3 milliseconds. Currency prices move in what we call pips. If you have a look at the quote here for euro against US dollars on the right-hand side, you can see that the price marked in red as the sell price is 1.37950, and the price marked in green as the buy price is 1.37974. The difference between the 950 and 974 is 2.4. This is what we call 2.4 pips. So you can see that the last decimal place represents a fraction of a pip. Whenever you look at currency prices, you'll generally see two prices quoted. This is the bid and the ask. So if we continue with our example of Eurodollar, if you want to buy euros and sell US dollars, then you'll be paying the asking price. So you'll pay 1.37974. If, on the other hand, you want to sell euros and buy US dollars, you'll be able to sell your euros at 1.37950. Another thing to be aware of when you're trading currencies is the size of the contract. Now, with IBFX, a standard size contract means that one full lot is the equivalent of 100,000 units of the currency on the left-hand side of the pair. This is what we call the base currency. IBFX also offer a mini account where one lot is the equivalent of 10,000 units of the base currency. Now you don't have to trade whole lots at IBFX. In fact, you can trade as little as 1% of a whole lot, or 0.01. So the smallest trade you can actually take with IBFX is 0.01 of a mini lot, and this has a face value of 100 units of the currency on the left. Well, we hope you've enjoyed this very quick introduction to trading foreign exchange with IBFX. If you have any questions whatsoever, please don't hesitate to contact our global trade support team. They're standing by 24 hours a day while ever the market is open, ready to answer your questions.